Hello traders, welcome to this Wednesday's Marketing Insights video on the indices. We're going to talk about the S&P 500 and also the US dollar index. We've seen the dollar weakening yesterday. Euro was upbeat as well as the pound. Some data on the European side were better than expected. Aussie, Kiwi were weak purely on profit taking, in my opinion, because there is also supporting data from the consumer sentiment action in Australia. It doesn't seem to be helping the Aussie moving higher, which seems to suggest it's all profit taking ahead of the very, very critical Fed interest rate decision today and the press conference, of course. That tells me that equities might start falling, okay? So we are seeing signs on the technicals and also on the fundamentals, and I will tell you exactly what we can focus on for the day, at least during the day or later on the FOMC, that is going to give us further clues. Now, obviously, the Fed is going to keep the rates unchanged, right? But there's going to be Fed chair is going to be signaling for the future guidance, as well as actually talk about a number of things that, in my opinion, the most critical is going to be something that he's already talked to before. He's made a call for fiscal stimulus. Okay, he pushed last time, and he's likely to actually push a little bit harder this time because there is resistance from the Republicans in Congress. And the Fed chairman, actually, as well as others, seem to believe that fiscal support is very, very, very critical at this time. It's actually more urgent than it has been before. And in case that there is some sort of resistance, again, going down the line from Congress, then, you know, we are really looking at this rebound to seize and start weakening the equities as well. Now I want to go ahead and start with the S&P 500. We're still looking at this as a complex correction, okay? So we're looking at this being, that was the end of wave 5, cycle wave, A, B, C for W, WX for X, and then another move to the downside. Now, since we broke the 31.36 with the 78.6 Fibonacci retracement, we're then looking at the 38.57, which is the 88.6. Now, this level coincides, or it's a confluence with, the Fibonacci expansion of waves W and X is at 32.55. The Fibonacci extension of the waves A and B of the Y wave is also at 32.39, right? So we are very, very, this area over here between 32.30, let's say, and 32.55, 60 is very strong. And this is where I think we're going to see prices, start moving lower. Now, on the RSI, we see some signals suggesting that there's going to be another move to the upside. And this also supports my technical view, okay? Because this wave to the upside is not finished yet. We've done waves A, we've done waves B, and 4/5 of wave C, okay? So I'm expecting another move to the upside to take out wave 5, okay? And then from there, start looking for prices to move lower. We do expect, of course, to validate this signal on the RSI. Again, we do indeed, you may say, see a bearish signal here, but usually we want to see another one, okay? So most likely we're gonna see the RSI moving higher, and then we get a shadowing bearish signal on the RSI here as prices move up, okay? So I will really pay attention to the 32.60 because anything above that could invalidate this move as a correction, and it means pretty much that this ended down here, and this is now 1, 2, this is probably part of wave 3, okay? So we're going to need more side than 4 or 5 for a fresh high. Now on the US index, on the US index, that was what an amazing opportunity, guys, because we talked about, we've been expecting for this formation to break for a while, okay? We're looking at this as a triple zigzag, which changed to a triangle. Doesn't make much difference, to be honest. It's just where we headed after the break of this level down here, and it was a very good opportunity, which we've been calling for months, okay? I'm looking at this trend very, very, very soon, okay? If we take the Fibonacci extension of waves 3 and 4, we're going down to the 96.93, okay? We broke that level, and that means that we are going to head down to the 161 or anywhere actually between 161. The 161 is exactly the previous low, 94.64, but I doubt we're going to get there, okay? Where I think we're going to get to is if we go most recent move to the downside, waves 1 and 2 Fibonacci extension, that gets us to the 95.85, okay? And this is the 206.1 Fibonacci extension, okay? So that means to me, okay, that there is more downside expected anywhere between 95.84 and 95.57 because this is the 88.6 Fibonacci retracement of wave 1, okay? This I'm expecting to be wave 1, and then we're going to see prices moving higher for wave 2. We can go up to 98.55 if we are bullish, up to 94.50 if we're less bearish, if we're less bearish, and that's how it works pretty much. So the correction will really determine also the continuation to the downside, how much we are going to extend. Now on the RSI, I see a bullish signal here, bullish hidden divergence. I'm expecting this to move lower. And once that moves lower, what is going most likely to happen? Price is going to go down here. Then the RSI will move somehow like this, create a hidden divergence, or potentially we could get an opposite signal over here, okay, with price moving a little bit up like this. Most likely to be the case, but after we've reached the fresh low. So I'm expecting that area now around 95.60, 95.80 to be very critical for the short and medium term of the dollar index. So as I said before, attention on the FOMC. Before that, we'll have, of course, the EIA report. It's going to move the oil markets. So I would really pay attention to commodity-related pairs as well as the FX majors later, closer to the end of the session with Powell's speech.